Wholesale market. A wholesale market is where big players like banks, hedge funds, and pension funds trade large quantities of assets directly with each other. These trades happen either through direct negotiation or on specialized electronic platforms with lower costs and much larger sizes than retail markets. Key traits include high volume and low transaction costs, and the benchmark prices set here ultimately ripple down to influence what you see in regular markets. The wholesale market is the deep reservoir where true liquidity and pricing for all financial markets are set. When this reservoir freezes, as we saw in 2008 and 2020, retail prices become unreliable and risk spreads explode. That's why wholesale data like SOFR or SONIA give us a direct window into institutional funding conditions and help anticipate major price moves before they reach retail markets. A pension fund wants to sell $50 million of U.S. Treasury bonds. It reaches out to 4 primary dealer banks directly, seeking the best bid. Bank C wins with a price of 99.08, and the entire trade happens at a spread of roughly half a basis point, far tighter than the 3 to 5 basis points typical in retail. This trade settles quickly, often the next day, and never appears on any retail order book, showing how wholesale markets offer efficiency and scale that retail investors don't see. To use wholesale market data, start by monitoring benchmark rates like SOFR, SONIA, or Euro STR. Rising funding costs often signal upcoming retail credit tightening. Watch for volume spikes and spread blowouts, which can reveal institutional accumulation or liquidity stress before retail markets feel it. Finally, in crypto, wholesale liquidity on institutional platforms typically moves minutes ahead of retail prices, so don't overreact to large retail trades until you've checked the wholesale market first. Many retail investors confuse wholesale prices for retail prices, assuming tight spreads mean fair pricing, but wholesale markets often diverge dramatically during volatility. Others mistakenly believe wholesale markets are level playing fields, ignoring that large participants have superior data, lower costs, and more negotiating power. The real danger lies in ignoring wholesale funding rates. When these spike, your cost of carry rises and leveraged traders can face unexpected losses.